Good evening, ladies and gentlemen. This is Barry Norman on behalf of TradeTime and Investing.com, and welcome to our webinar on Bitcoins and altcoins and a little bit of technical analysis. Now, tonight's class is sponsored by TradeTime, one of the newest and most unique platform providers in the marketplace. They offer you a very unique, personalized way to trade. Before you ever open an account, before you do anything, you customize and define your trading objectives, the type of account you want to have, the way you like it set up, the way you like communications. Everything is set up for you personally. Then once you open your account, it will be all set up exactly how you want. It is unique. They offer complete account customization, very extensive range of trading tools. You have fund security, your funds are held in a segregated account, and a very robust trading platform. And they're also a regulated provider. And as you can see on the screen, they have some very unique tools and easy ways to see what's going on in the market. First, you get an updated market summary right on the screen. You also get market trends that are continuously analyzing how markets are moving and how the buyers and sellers are trading at the moment. And you also get up to the news, up to the minute analysis. You get a very unique platform that's intuitive and user friendly. You get advanced charts with indicators. You have customized alerts and one-click trading. And on top of it, you get live signals pushed right out to the platform that not only tell you what asset you should be looking at, but also give you the objectives of where that asset should be moving, where you should put your stop loss and take profit, how many other traders have followed that signal and initiated that position, and you can just click on seize the moment and open a trade very quickly so you can lock in the best price possible. So remember, if you desire a unique account, you can choose from a big range of options, which type of platform, what market you want to trade. You can shape your whole trading experience with TradeTime.com. So when you have a minute, go customize an account for yourself at www.tradetime.com, and you'll be able to follow along and watch or use the charts there to analyze Bitcoin and Ethereum and all the other altcoins. It is the next generation platform. It is so easy to use, so dynamic, and execution speeds are incredibly fast. So let's get started talking about Ethereum and Bitcoin, the two biggest cryptocurrencies out there today. Now, today's webinar is being recorded. To view a recorded version, visit www.investing.com and go to the Education tab and locate Webinars on Demand. And there you can see not only this class, but all the classes we've held in recorded format. So help yourself at your convenience, but it'll take about 24 hours for this class to be there. So give it a little bit of time, but you can go over there now and see all the other classes. Now, as you know, all the headlines lately have been filled with cryptocurrency. Between blockchain, Bitcoin hard forks, Ethereum forks, ICOs, you can't open up a newspaper, not just a financial newspaper, you can't open up a regular newspaper. Just today, I opened a paper in Overstock.com, a U.S. retail brick and mortar store, which was the first to accept Bitcoin as payment, has now announced a $500 million ICO. I think it'll be the first ICO for a retail chain in the world. But it's we can't escape what's happening in the markets. Now, there are a lot of buzzwords floating around to describe segments of the post-global financial crisis rise in startups and their innovation. We have the words unicorn, angels, urbanization, party rounds, on-demand, and marketplaces are a few to come to mind. But if you just pick up one word, the best to describe the last 8 years is disrupt. Now, a lot of people just think the word disrupt is a negative connotation. But really, disrupt simply means to shake up the old and open the doors for new. Now, ask nearly every startup, and their goal is, and their answer is to disrupt, throwing out an old industry on its head and bringing in new technology and processes. And this is kind of what the cryptocurrencies and blockchain are doing to the world of finance. And again, It's, finance is this old, dodgy, traditional brick and mortar industry that's hidden behind lots of jargon, lots of big words, and all that we're trying to do is disrupt or change it, and it's happening. So a core reason for the existence of many of these barriers is the role of the financial market are the trusted intermediaries between parties. Rather than companies or individuals lending money, selling stocks, or transferring payments to each other, firms such as banks, credit card networks, and brokers are the middlemen for these deals. Now, when we talk about trust, lately, as you can see in the last few years, J.P. Morgan, all the big investment houses, all the major banks have been getting fined. Wells Fargo is all that trouble for their shady dealings. HSBC have had employees prosecuted, have had all kinds of fines, and it's happening everywhere. So the trust that these intermediaries have built is dissipated. And the market was ready for new ideas, new middlemen, new ways to fund and transfer investments, and new IT developments, and new safety and security. So imagine if only there was a method to connect parties to a transaction, and a secure and trusted method that removed intermediaries. In theory, this would reduce the need for financial regulation and technology spend required to govern and power the middleman's intermediaries. So we welcomed, very slowly, Bitcoin. Now, Bitcoin was introduced in just a hypothetical manner in a white paper issued in 2009. As you know, it took all the way to 2011, actually back in 2013, for most of us to even know what the word Bitcoin was or blockchain. But since then, Bitcoin, blockchain, P2P, decentralized networks have all become watchwords for all of us. Now, Bitcoin has become so large, it's become the generic term, like tissue and Kleenex, or Windex and glass cleaner. Okay. Now, Bitcoin is the biggest out there. It provides most of the liquidity in the market, but there's many other competitors coming into the marketplace. But as a digital currency, Bitcoin can be transferred as payment on a P2P basis between two parties. In addition, and this is what's getting important, owners of securities such as Apple stock can designate fractions of a Bitcoin to represent their shares. These shares can then be traded directly to others using the blockchain and bypassing traditional brokers. So the easiest way to define Bitcoin is to call it a digital dollar. Not a US dollar. We have New Zealand dollars. We have Canadian dollars. This is a digital dollar. That's really all it is, minus the formal regulation that comes with a bank. It's not a technology. It's not a company. It's your money held in a digital form. Now, as Bitcoin grew and this blockchain technology started getting accepted or becoming a possibility for a lot of financial or investment houses, accounting firms, started getting adopted, or they started looking at ways to use it, along comes a new competitor called Ethereum. Now, this was developed by a gentleman named Buterin, and he looked at solutions built on blockchain, and he came to the conclusion that it's better off to create a separate blockchain that is built for issuing securities. This led to the creation of Ethereum, which included smart contracts, and smart contracts is what is driving Ethereum and the potential demand for this Ethereum blockchain. On top of that, all the growth of ICOs, because most ICOs require you to buy their tokens with Ethereum. So that's driving a demand for Ethereum. So differing from Bitcoin and the blockchain, one of the novel introductions by Ethereum was the inclusion of smart contracts within its framework. Through this feature, the Ethereum blockchain would sustain more than just P2P payment transfers and asset exchanges, but also an easier ability to issue programmable adjusted dynamic assets. This feature is currently the main facilitator of the dozens of multi-million initial coin offerings. Now, the thing is, before we can apply analysis, before we can start deciding what price these assets should be trading at, or whether we can trade them to go up or down, we have to understand what's driving price. Because these assets aren't government-issued assets. They're not driven by an economy, and they're really not driven by a corporation. They're driven by the demand for the currency and the community that's built around it, which adjusts or increases the demand. And this demand is what drives the price. Just because Bitcoin soared from $400 to $6,000, it's not because the central bank raised interest rates or initiated QA. It's only because more users came into the market, creating larger demand. Okay. And so this is very important. You have to understand what drives the markets, because it is different than most of the markets we deal with every day. It's new. So in its current form, hypothetically, Uber operates a central database and technology that collects fares from customers and distributes payment to drivers while keeping a percentage of the funds. This is something we can all understand. Uber's taken over, the rideshare around the globe. It's become a multi-billion-dollar corporation in the blink of an eye. And what does it do? It's got a database, it's got technology, it collects the fares, and pays the drivers. We all understand it. This is a process. It's a new process of doing business, but it's what we can understand. Now, imagine using Ethereum and smart contracts. Uber can issue Uber coins. Okay? They could, and they probably will, issue an ICO with Uber coins. These coins would include code in them to control how payments are handled and distributed. For example, an Uber rider would pay their driver an Uber coin, depending on the location, distance, and time. So instead of paying the man €5 or 15 pounds or $10 and using your credit card, you would use Uber coins that you had bought and had in your account. Now, if Uber coins have gone up in value, you would have made a profit, or those rides would be cheaper. Now, for example, an Uber rider would pay their driver with Uber coins, depending on the ride. And the Uber app calculates how many Uber coins are required for payment. Based on the coin's code, the Uber coins would be distributed to the driver and to the Uber Foundation. So when you click on it and pay for Uber, so many Uber coins would go to Uber, and so many Uber coins would go to the driver. Everybody would be paid. But what's the biggest difference of it all? The transactions are easier, faster, and less expensive. Because Uber is paying drivers all around the world, collecting money in all types of currencies from all types of payment services, and all of this is expensive. Now, unlike a corporation, the Uber Foundation would be decentralized groups that provides computer power, support, and development work to operate and update Uber. Contributors to the foundation would then be compensated based on their underlying code of Uber coins, just like Bitcoin miners. So lately, this contract model is most notable for the creation of ICOs and a new model for startups to raise funds as well as engage investors. However, the underlying model of Ethereum's blockchain can also handle the creation and transactions related to regular securities. What that means is you could now buy and sell securities through a blockchain and a P2P network without ever dealing with a broker. And it also means that the cost of these transactions would be a lot less because you're not paying commissions and brokers overhead, and you're not even going through an exchange. So in other words, if I had 10 Apple shares and I wanted to sell those 10 Apple shares, you could buy those 10 Apple shares directly from me instead of going through an exchange, a broker, and everything else. And they would be transferred by the blockchain in a permanently indelible, unchangeable transaction that would be stored on the blockchain. So examples include a broker that holds 1 million shares of Apple. An Ethereum contract represents these shares that can be sold on a P2P exchange. The new coin-based shares would include in the contract that they can be exchanged for the physical Apple shares as well as rights to receive dividends and payments. Because ultimately, we don't care where the certificates are. We don't care who. We ultimately care that I can be identified as the owner of those shares, and at the same time, that those shares are legally owned by the person who is selling them to me. Now, another example is a P2P trade between investors bullish on two different securities, Amazon and Google. In normal exchanges, a trader who believes Amazon will outperform Google can buy shares of Amazon and sell shares of Google to reduce their risk. Through a P2P, you wouldn't have to actually ever open those positions and cover the costs and the commissions. You would just simply get a smart contract for the difference between Amazon and Google and be paid the difference. Now, you're not trading with a broker. You're trading with other owners of these shares that are secured by the blockchain process. Okay, so there's many things happening out there which you have to understand. So the question is, can a P2P decentralized exchange replace traditional centralized exchanges? There are a lot of reasons to believe the answer is yes. Among the reasons are lower transaction costs, transparency of counterparties, and the ease to connect global participants. So this is what sets Ethereum aside from Bitcoin. This is also what's driving the Ethereum price, while Bitcoin is being driven by the use and the demand for blockchain, because the blockchain is ultimately the underlying technology being used. But then you also have Ripple, and Ripple is designed to handle banking institution networks and transactions through the Ripple net. Okay, so you have to understand what is going on with all of these coins and what happens with them. So where retail investors have the advantage is in their numbers. Through public forums and bulletin boards, investors have banded together on the internet to discuss trading ideas. These early internet groups have since evolved to social trading networks and specialized investor websites. A common denominator for these sites and platforms is users are able to leverage the power of the crowd to gain feedback on ideas. Okay, now you got to understand, cryptocurrencies are based on social networks because it's the demand of the people coming into the marketplace that are buying and selling these coins. The more people that become part of that network, the more there's a demand for those currencies. And therefore, they push the currencies up. And this has been done extremely well through social media, headlines, and the building of community. Because if you notice, most of the, we have all these headlines about Bitcoin and Ethereum and cryptocurrency, but there's basically only two currencies that control the whole market. Ethereum being relatively new, Bitcoin still controls 72% of the cryptocurrency transactions are for Bitcoin. Now, ICOs have really sent Ethereum on a tizzy because it's increased the demand because ICOs are going crazy here. But you also have to understand what's happening in the marketplace with government regulation. You have to understand what is happening with demand. You have to understand the differences in what could be driving those currencies. Now, granted, when Bitcoin goes up, most likely Ethereum's going to go up because the market's rallying. This is the same thing. When gold goes up, silver and platinum usually go along with it. Okay, but it's not what's driving the markets. Now, cryptocurrency is such a rage these days, and the truth is no one actually knows the answer to where it's going. So please don't go all in on someone's Quora answer thinking that they actually know the correct answer. It is a high-risk asset. Now, just recently, Global Advisor co-founder Tom Lee predicted that Bitcoin would reach $25,000 by 2022. Now, that's 5 years from now. Would you want to bet your house on that? I'm not so sure about it. But if you have an extra couple dollars sitting around and you could buy a part of a Bitcoin or a Bitcoin, you might want to let it sit around for a while. But we have seen an 870% growth this year. So, hey, where do we go from here? That's the problem. How do we trade it? How do we invest in it? And how do we trade it successfully? Now, because there's no economics data, no fundamental analysis, no central banks, no politicians involved, there's no elections affecting it, it's very hard to value and predict where the prices are going. And there's all kinds of gurus out in the marketplace. They all want to tell you what's going to happen with Bitcoin. They all want to tell you their trading system. Now, the fact is, these assets will respond or will give you the best advice or the best understanding using technical analysis, since no fundamental analysis really has much an effect on these assets. But the fact is, outside of Bitcoin and Ethereum, most of them are so new that there's no market history, there's nothing to depend them on. So we can judge, but the thing is that both of them, both Bitcoin and Ethereum, are trading way above the levels they've ever reached. So what do we have? Do we have old chart patterns? No, they're too new to have any history. Do we have support and resistance? Well, not standard ones, because Bitcoin's never been at this price. Okay, Ethereum's so new it doesn't even have history to go with it. But we can apply some technical analysis using things like Elliott wave patterns, because it helps predict how the market is moving, how these cryptocurrencies, and very well with Bitcoin. If we look at this Bitcoin rally, look at this. The market is moving in a standard format. Push and ease, push and ease, push and ease. And it's also following exactly as Elliott predicted many years ago how the market should move. So can we apply technical analysis and successfully make decisions? Well, the problem being is most of us want to be short-term traders. And that becomes a little bit difficult because Bitcoin is on fire. It has been consistently rising. And how do we establish entry and exit points? Okay, now, Bitcoin has reached a critical resistance level from the channel line. It has not been able to break out of this channel since June of this year. A breakout of an ascending triangle gives its target of almost $8,000, equal to the depth of the channel. Because when we see a chart pattern, the depth of that channel would be also the target move. Well, right now, if we were to put channel lines onto the move in Bitcoin, it would tell us we have a short-term goal of $8,000. Now, if we have a breakout from the range of 53.91 to 58.75, gives the cryptocurrency minimum target range of 63.59, which we're just about there. If this level is crossed, the next possible level is 68.45. Our higher targets will be invalidated if the virtual currency turns down from the current level. As to the risk-reward ratio, is not attractive. We don't recommend any fresh trades. However, investors carrying positions from lower levels should keep a stop loss at about 5,600. Because imagine, this is not the dollar or the euro that's moving in pips in small increments. Bitcoin's moving now in hundreds of dollars per coin. So you've got to be very careful because we don't know where it's going to go and we don't know how volatile it's going to be. Don't know where to put your stop losses. Okay. We don't know how to protect ourselves from the market. Now, once Bitcoin breaks out of the sustained channel, the stops can be raised to about $5,800 level and then trailed higher. On the downside, 58.75 is the earlier resistance and will act as a strong support. Now, there is a clear method to the madness, and hopefully everybody can learn something from this. Bitcoin has had an amazing run in 2017. The bull run of the century, actually, and it all started in March. After the denial of a downtrend with the ETF's upset, Bitcoin was validated as a threat to the establishment. We rode the rocket line trend right to the 4764 extension of the retracement denial as seen. Now, this was back in March. This was where everything was kicking off. And if you remember the first chart I showed you with the Elliott wave pattern, that would have been right about here. Okay. We've had some minor technical or fundamental actions, which was mostly China closing down the exchanges. We thought that would bring Bitcoin way down, but we had an easing, but the market just retraced and continued going up. So no, once the trend was established, we formed a nice Elliott impulse set as the market began to give impulses. Okay, and we can see this is the current chart for Bitcoin. And we can see it moving up. We can see the Elliott wave patterns that I showed you in detail a second ago. But they're dotted on here. Up, recover, up, recover, up, recover. We have a very nice trend line, but the trend line got broken, but reestablished itself here. Okay. The trends are everything in crypto because there's very little things that we can depend on. Okay. And the easiest way to know when to take profit or when to rebuy. Once the trend breaks, it's over and the market will correct. How that correction plays out is what determines if we continue on or not. Okay, again, I'm showing these are the current charts for Bitcoin as of just a little while ago. As we can see, the retracement held the classic bullish Fibonacci retracement of 0.618. Okay, so we can actually see it on the chart right here. We see our Fibonacci levels drawn here. We see the price easing down to Fibonacci at this point and then bouncing back up and restarted the rally again. As we resected the one-day cloud and completely confirmed support by those two indicators, the market broke out of the downtrend and flagged out to signal to the smart money that we are good to go, and we continued on upward. The retracement of that flag set us to another nice trend where we get, once again, an Elliott impulse wave set as everyone's emotions were running high and peaked this time at the 2.618 level. Once the trend broke, signal to get out, markets give us a nice second top and a B wave in the ABC correction. And the markets were doing exactly what they should have been done. It's being predictable. If you know what to look at. Measuring the retrace, we once again held to the bullish 0.618 retracement. Wait, is the market really doing the exact same things and behaving the same way again? No way, you don't say. The strong one-day cloud support as well. Market denies further downside and shows it's ready to keep boogieing. Emotions are still high. Everyone is a genius at the point and the next wolf of Wall Street. Because everybody who got in Bitcoin thinks they're a genius. They think they got in at the right time, made a fortune. Well, the fact is, you know what? 2 years ago when I gave the first webinar on Bitcoin, and I needed to understand how it worked, what wallets were and exchanges, I opened up 3 wallets and bought 3 Bitcoins at less than $400 a coin. I never sold them, not because I invested in them. It gets complicated to turn them back into cash, so I left them there. I figured I'd use them for other webinars and other demonstrations and everything else. Well, that's 3 Bitcoins that are now worth $18,000. So am I a genius? Nah, I didn't make an investment. I got lucky. Paid for my vacation. So blind luck is guiding them since they don't understand the true way that the markets work. This time the market slowly just casually creeps up to the minus 125, where many think a double top is coming. However, there is a bigger picture being painted, and here we are. Okay, so what we're sitting right now is on the 5th wave of an Elliott wave, right on the money. Okay, all of our retracements are in place. The market is doing exactly what we thought, but now look at our trend line. Our trend line is current and accurate, but we've had to reposition our trend line, but we don't have a third validation point. But this is our trend line way down here. So we're seeing that the markets have pushed up, ease, pushed up, ease, pushed up, ease. So we're going to probably get a retrace to somewhere around this level. So better be careful for it. It might give us an entry point if it bounces off this trend line. Okay. But we have to be careful what's happening in the market, because historically, if you look at Bitcoin, each time it's had a hard rally, and there's been many, it rallied up. And we're not just talking about this month. We're talking about historically. It rallied up. When it went from $100 to $400, it came back down to 200, but it set the new level at 200, never back down to 100. When it went 400 to 1,000, it came back to 700, but it never went below 700. When it went up to 2,000, it went down to 1,000 again, but it never went below. So it's now setting a new historic price level, but because we don't have any history at this price level to even look at for an example. So the bigger picture is what's there, and the larger Elliott waves are being painted, and once again on a trend. Let's take a closer look at the 3rd wave. So immediately we can see that we have a perfectly tagged 1.618 this time. Understand, as we further ascend in price, each top on the following wave will be a smaller Fibonacci extension because the price is too expanded at this point in retrospect. Of course, we can have some pretty gnarly waves, especially for the 5 wave. But understand, Bitcoin is a $100 billion market now, and it takes a lot of fiat to move at this point, and more as we're continuing on. So I know we don't have a classic blow off top like we usually do, but like I said, it's taking quite a bit of money at this point, and where will all this money come from? Because now at $6,000, it takes a big investment to get in Bitcoin. So even though when we were talking Bitcoin $200, $500, $700, you had a lot of people who could get in on the investment. It was bringing fresh people to the market. Well, when you're talking about a $6,000 investment to buy one Bitcoin, now granted, you can buy partial ones, but that $6,000 number is stopping a lot of people from entering the marketplace at all. Or they're looking at ICOs that are at 49 cents, 39 cents, and hoping that they get lucky with them. But still, could we still go farther? Possibly. We will have to see this correction, how it now plays out. If it holds in the bullish 61.8 level shown above, then yeah, we might just keep playing the same old game. However, it would be history in the making if we made another Elliott wave past 3, especially where we are in price. Many things are drying this up as well. ICO bans and regulations coming, volume decreasing, and the general sentiment on Bitcoin and the governance issues. So remember, if the trend breaks and we don't hold, this will all pan out as drawn. Now, there are 2 possible scenarios, a bullish retracement of the entire move or a bearish one. Okay. So we have to wait. We're going to be looking critically at this possible point on the price level when it comes back to retrace to our trend line here. Let me get a marker you can see here. Here and here. We also might get some panic selling at this level. People think it's going to recover, or people like saying, I want to book my profit and let's sell out. And then if we get form the B and it doesn't make a fresh top, then we're going to get a lot of selling down the C level. So this is where we stand in reality. This is what we're looking at. This is the critical trend line we should be watching. This is the next critical price level right here. Okay, now that's a big recovery. That's all the way down to $3,000. Okay, so we're looking for 5 or the 5-point wave to might come all the way down to form the A, all the way down. That's going to be a huge drop, and you'll see a lot of selling out of the marketplace. So we want to watch it because it's coming to this trend line. It's such a big drop that we might see panic selling, and we might see a lot of selling, which could then just kill the uptrend, or we might get a bounce off and move back up to the B level again. We have to watch it play out. What happens all depends on what fibs the retracement hold. All this completely coincides with alts taking over as their massive realized profits need to be realized and sold in Bitcoins for the most part. Plus, you have some people just being completely emotionally tortured and tearful. Now we move over to Ethereum. I don't trade Ethereum and I don't watch Ethereum too much. We know Ethereum's moved way up, but we don't recommend buying on the way down. We should wait for the next day or two to confirm the current support zone for Ethereum, but I think Ethereum hit just about $400 earlier today. If, however, the support holds, the digital currency is likely to trade in a range for the next few days, and then attempt to start a new uptrend. So we did see it today start that new uptrend, and we might have something generating. But right now, we don't find any buy setups. Therefore, we don't suggest any trade on Ethereum at the moment because there's just nothing that we know that you can look at. And therefore, this is my outlook, and this is what we see on the technical analysis side of these coins. But again, you need to develop what type of analysis you wish to use. Fibonacci levels hold well. They replace your support and resistance zones because we don't have any eyeballing. So the fib levels, Elliott wave patterns are holding very true in this current movement with Bitcoin and this strong rally upwards. But you have to be very careful because you have to also be able to figure out where to put your stops in a volatile market like this, and understand you have to be able to afford to trade that asset and afford the volatility, and also make sure your profit to reward ratio is high enough, or your profit to risk ratio is high enough, that you don't make investments that just aren't worth being involved in. So sometimes getting in a rally late, or getting in a rally when everybody else is in the rally, may just be too late to enjoy the market. But keep an eye on it. There are some possibilities out there. If it retraces, you could very well buy at that retracement level. Okay, so that's all I got to say. But while we're at it, go to www.tradetime.com, set up your charts with them, set up your customized account. If you want to trade crypto, click that in your customization. You'll get all the information, all the technical analysis, all the signals on crypto. And TradeTime will make sure you know exactly what's going on in the markets up to the minute. Thank you very much. Thank you for joining us, and thank you for being part of the Investing.com family. Have a good night now.